talking about how we can bring DeFi to the masses. There is so much to cover in this that obviously we'll have to do it on a relatively high level because we have education, we have tech, we have usability, we want to understand case studies. What does DeFi even mean to everyone? So I very much would like to ask the panel to introduce themselves and their area of expertise, and then we can get started.
So, hi everyone, good to be here today. I'm Rita Martins. I'm the head of fintech partnerships at HSBC. And being the new topic in the industry, of course, we also start looking into the Web3 in terms of partnerships.
Hi everyone, I'm Caroline Hughes, CEO of LifeTies. We're building the fintech metaverse, so we bridge TradFi and DeFi and help mainstream consumers understand how they can use DeFi, NFTs and TradFi to finance their lives.
Hi folks, I'm John Frizelle, CTO of Pluto Digital, a Web3 technology and operations company. We're focused mainly in the DeFi and gaming/metaverse space and have launched a yield optimization product called YOP Finance.
Hi, this is Amit. I'm a head of DeFi research at Polygon. If you don't know Polygon, it is Ethereum scaling solution providing one of the cheapest transactions, and our aim is to have a mass adoption of a crypto. Thank you.
Thank you very much indeed. And you'll notice, of course, that Amit is joining us on stage and he's not doing a Julian impression. So let's kick off with what do we mean by decentralized, with DeFi and decentralized DeFi? When I came into the space in 2017, I was very keen to talk to wealth managers and institutional finance and trad finance about this upcoming world, and there was no interest at all. So I'm delighted to have Rita here to be able to talk about what does that mean when it comes to HSBC's viewpoint. Can we start there?
Sure. So I think when we think about DeFi, there is really a spectrum around how decentralized are we talking about. So we have the 100% DeFi, 100% decentralized, where everything is really decentralized, and that has its benefits, but also its risks. So from a consumer perspective, for example, it's much more complex. If you are not digitally savvy, it's much more complex for you to set up your DeFi wallet, for example, and to have your own key. It also brings some of the risks that some of the clients, they might not want to have it. More recently, we also have the spectrum is coming a bit closer to the centralized model that we have currently. And we have, I think in the industry, we start calling it CDFI, which is really when you have central entities that are providing decentralized products or services. I actually saw a bit of the panel that they were talking earlier, and they also had something similar for the exchange part. And I think that's really something that it's interesting is that even currently, if you think about the banking world, different consumers, they have different risk appetites and they're going to have different products. So it's really understanding all the different models that are currently available, these benefits and disadvantage. I think that model where you have central entities providing the centralized services, really the main advantage is that most of them, the user experience seems to be much easier. And also they provide a bit of the controlling the risk. So there isn't as much risk for someone who is coming, starting in this space.
So when I was introduced to the idea of decentral and your cryptocurrencies, the idea was radical responsibility and being your own bank. What does decentralized DeFi mean from your point of view, Joe?
Yeah, so on Rita's point, there's a spectrum of decentralization, but there's also layers of decentralization that I think people don't necessarily consider. Like at the base there, you have the chain itself. How decentralized is that? How many validator nodes? Where is the concentration of proof of stake or proof of work miners? At the next level, then you have the protocol. How decentralized is that in terms of governance? Do token holders get to vote on proposals and decide the future of the protocol? And then the bit that a lot of people I think don't give enough thought to is how decentralized is the actual governance and control. So how many multi-sig signers does it take to actually execute a change to the protocol? Can that be done independently of what the community want? And when you start looking at the different layers, you'll find that in a lot of protocols there is centralization creeping in somewhere along the way. And then beyond that, if you take the Tornado Cash use case, it was a fully decentralized protocol, or so we thought, until Infura and Alchemy blocked all API calls, their code was deleted, their web hosting was disabled. All of that was centralized. So even in a decentralized protocol, there are a lot of centralized points that exist that we need to be aware of.
Amit, did you have anything you'd like to add to that?
I think you covered most of the points, but one of the important thing which I think people miss about decentralization is that it happens in the DeFi even before you design an idea. It's about exchange of ideas. You see in the Telegram channels, in open forums, there is a decentralization of technological innovation happening. So I think that's what makes it happen, the perfect DeFi protocol or an application layer. But also coming back to the governance, actually, that's super important, because we once, like, if you see the DeFi evolution, it has been some sort of on a scale of 0 to 2000, and in this scale people miss a lot of things. So if one person is able, if you give responsibility to only one person to do all the things in the protocol, he's gonna mess it up. So so that's why the protocols in which the governance has been doing pretty well, they have actually performed well, even in the 3 economic shocks, and now still, like, we are in one of the economic shock. You can see, right, for the example, Uniswap governance, like, they're doing absolutely fine.
So this is about how to bring DeFi to the masses, and I think we're all aware that there are lots of challenges which we'll get on to. But before we talk about that sort of thing, I'd love to learn about the use cases that are working. Caroline, if anyone was here at 10 o'clock this morning, it was a Women in Web3 panel. We were asked at the end, who would we like to sort of put our hands up and say who they admire as a woman in the space? Obviously, there's too many to mention, but Caroline was the person that I chose, so no pressure, tell everyone. What are you guys doing to tackle it and with the use case?
Well, when I think about bringing DeFi to the masses, there's essentially kind of 2 main strands to that. There's the strand that we're tackling, which is creating the consumer layer, i.e. can we make DeFi make sense to mainstream consumers? Can we make it easy for them to use, and can we kind of embed it in their lives so that they don't have to actually be that knowledgeable about blockchain, about crypto, about DeFi? They can just use it, right? And they can use it a lot, and it becomes sticky, and it just becomes exactly the same as if they were using kind of traditional finance, but they get all of the benefits of DeFi in the sense that it is permissionless, they don't have to have a credit report, there's no gatekeeper in the face of like a bank or an insurance company saying whether they can or can't have access to financial products. So when we look at use cases at LifeTies, it's very much about how can we educate consumers, but in a way that means that they're starting to use DeFi almost without even really knowing how. You know, how do we get it so that it is as simple as the way that they're used to using any of the normal kind of fintech apps? Because right now, one of the main challenges, as I think we're all aware, is that usability is really, really hard. Even for like loads of crypto natives in the room, right? I bet the first time that you tried a DeFi transaction, you were like, you tried it like with a tiny amount of money, because at every step you're like, is this the point that I lose everything? Right? It's just not designed in a way that most of us can understand. And it certainly isn't designed for mainstream consumers. So there is a ton of work that we need to do in kind of the user experience piece to make it usable. And then kind of the second piece, when I think about bringing DeFi to the masses, it's what can we do at an institutional level? And it's great actually that we have Rita here, because it's kind of we can either look at it at retail, and that means that we give consumers access to the equivalent of savings accounts, an ability to borrow, an ability to invest their money, an ability to get insurance, right? All of the standard kind of TradFi products. But where I actually also think that we're going to bring DeFi to the masses is that institutional level where DeFi effectively becomes things like the standard payment rails. You know, it actually starts to go up against Visa, MasterCard, and some of the fintech rails, and starts to just make that whole process of transactions even quicker, even cheaper. And then that is also bringing it to the mainstream.
Absolutely. And when it comes to use cases, I know Polygon has many, so I'd love to hear about those too.
Yeah, I think I should comment on the first point, the user experience first. And this links to the user experience is also linked to Polygon. First is an aesthetic and use smooth sailing on the DeFi protocol. So now whenever a protocol comes to our team, we really tell them to get the user experience sorted first, hire an awesome designer, a user experience person, because we want a seamless experience, right? And what we want is that at the back end, the user it shouldn't bother users. Like you book a Uber app, right? It doesn't bother to you what kind of make of a car is, like how much mileage is there, how many gears are there, how it is working, right? It just gets it work done. So that's how the blockchain used to be, supposed to be, sorry. And about the user experience, the Polygon, and we have a huge use case of user experience, because what we actually provide is one of the cheapest transactions with as much security as you can imagine. And also our world of scaling solution, like our L2 solution is upcoming in the market, and we are about to launch a testnet, and the mainnet is going to be soon. So you're going to see much more cheaper transaction and much better security. And that's what institutions and the protocol builders needs to look ahead, like the user experience with least cost possible, with the at most security, and get a seamless app. And we are there. Like we are actually, if we do that, we're going to accelerate the revolution of DeFi. Yeah.
And in terms of specific case studies that you would like to share from Polygon? Well, if you, yeah.
No, I have one.
The case studies that you have would be great to share. Yes, please.
Sorry, I was finding it difficult to hear you, actually. What was the question?
We were talking about use cases. So if you have any that you wanted to share, I didn't know if there were any in Polygon that Amit wanted to cover. And then I was going to go on to some of the things that have been raised and talk more about the challenges. But if you want to raise, when it comes to challenges right now that we have, and sort of discuss some of those topics, I'm happy to go there.
No, I'm okay on that one.
Okay, so we spoke about, and we can come back onto some use cases. We spoke about some of the challenges, and regulation, of course, is one of those, especially as Caroline said, if we're looking to bring institutional finance into this. Rita, I'd love to understand some of your insights on this.
Yeah, so I think in terms of the challenges, there is two main ones. So the one that my panelists were just talking around user accessibility, being really simple, really easy. You're not even thinking about what you're doing, you're just using DeFi. The second one is really the trusts. And the trusts, I do believe it's a bit of a controversial topic in the industry, which is always interesting, but it's really around regulation. So for some of the big institutions to come into this space, regulation will be a key thing for it to be coming. So then it's much more clear what is possible from institution side, what is possible to provide to the clients, and also from the client side, what is possible to provide, or what is possible for them to use. And we're also just talking around this with a few people. It also depends on each countries that we're talking about, and different regulators will be testing as well. I think the main key thing with regulation here, as with any other new technology, is that they are also learning what does it mean, what is blockchain, what are some of the use cases, what are the opportunities, but also what are the risks. And the ability to learn around the use cases, they will also be working together and saying, okay, what will be the regulation coming? And I think once we have the regulation, then we'll be seeing some of the institutions coming into play. And really, the main benefit of Web2 fintechs or Web2 banks is that they know the clients really well. They have created really simple apps for clients to use. So I think they're both aligned. And once we see some of these, then we'll see much more masses coming into DeFi, to come back to the topic.
I think you're right. And it's interesting, actually, because you're starting to see kind of like pockets of kind of the institutional plus fintech/crypto partnerships happening, which is probably what you're looking at a lot. And obviously you've got the BlackRock plus Coinbase one that was announced recently, but then you have other kind of sort of interesting use cases that have been popping up. So Fidelity, for example, now allows their people who are enrolled in their 401k, so the equivalent of their pensions in the US, they can actually put up to 20% of their retirement savings into Bitcoin. And it kind of went a little bit under the radar, I think, but as a kind of institutional use case of how they're just starting to kind of give access to at least cryptocurrency, if not full DeFi, I think that's really where we're going to start seeing it. And I think it's going to be driven by consumers demanding access to products. And so obviously on the retirement savings and investment side, it's being driven by consumers saying, but hang on, I want to be able to put some of my future retirement savings into cryptocurrency. And also from a BlackRock perspective, it's them saying, okay, well, we want to be able to have access to cryptocurrency as an asset class. And I think we're going to start to see kind of that trickle down of it moving from just pure access to the crypto assets themselves and then starting to move into where can we start to embed actual DeFi in terms of giving people access to new liquidity pools. Because that's a little bit scary for institutions, right? Fundamentally, they're balance sheet businesses. And so they're going to be looking with kind of one eye on, but hang on a second, we want to own the balance sheet. We want to control who has access to that balance sheet. We want to provide liquidity to the market. So I think it's going to be interesting how we see the beginning of those kind of tie-ups with DeFi protocols, where it's the DeFi providers who are kind of providing that liquidity and access to the crypto asset market. I think that's where we're going to start seeing more innovation.
And John, what would you like to see changing in this space to be able to attract more masses to DeFi?
So much. I suppose there's two main things. One is the initial on-ramp. I think for a lot of people moving from a centralized exchange or a CeFi product into the world of DeFi where it's self-custody, I think that's still very scary for a lot of people, and there's a very steep learning curve. The whole responsibility of self-custody, not your keys, not your crypto, but how do you take care of those keys? How do you protect them? What level of paranoia do you go to? Do you shard your key into 6 different pieces and distribute it globally in 6 different vaults and banks across the world? Probably not when you're just starting out. But the ability to recover keys, I think, is something that needs a lot more work. Social recovery, where you can nominate friends or family that each get a shard of your key that can be reconstructed. I think that is something that really needs a lot of work. And regulation. It is often a dirty word in crypto, but it's happening right now around us. We need to be engaged in it, and we need to be advocating for what we think are the right regulations rather than sitting on the sidelines and potentially risking DeFi being regulated out of existence, which, if you look at some of the regions, that seems to be the stance they're taking. So we definitely do need more regulation to make this more accessible and safer for people, but we need the right regulation, the type that protects DeFi and its users, as opposed to making it even less accessible.
Yeah, thanks. I have a slightly different view in terms of a pace of regulation, because 5 years before, I specifically remember, if you ask regulators, they thought every crypto coin, every cryptocurrency was a scam. So now fundamentally, I think everyone agrees that cryptocurrencies have fundamental valuation. So there are actually funds running around that. But about the regulation, I think since it has moved in a right direction, I would say the effort needs to be made from both sides. So because this is a new tech, and with every new tech, you cannot sometimes fit the old models of regulation. So the learning and education has to come from the both sides. And there is a huge amount of acceptability of regulation within the crypto industry as well, within DeFi. I am working with people who are institutional DeFi, a large institution. Of course, they want to get regulated, but they also want to get regulated in a right way. For example, identity check, KYC and KYB. It has been around like so many years, but there is always a threat of identity stealing, identity theft. And with the modern technology, for example, zero knowledge based technology, you can prove that you have the passport, but the other person will never get to see the details of the passport. So that's kind of a regulation, that's kind of a layer over the DeFi protocol in kind of a decentralized or modern technological regulated way might be the future, because there is no point sticking to the old things when we have the better things available at a cheaper rate, because we would be like those 1,000 scanners and printers, and we won't need that maybe anymore in next 10 years. And so coming back to why I'm saying this, because it's a reality. Polygon is about to release a product which is called Polygon ID, which is a suite of zero knowledge identity solution, the one which I was talking about. And that product is in so much huge demand. We are doing POCs for institutions, large institutions, that I think it's a future. It's a well-regulated future.
Did you have anything to add? I know that you lifted up your microphone when John was speaking, Caroline.
I think, from my perspective, we moved across from just traditional fintech to embracing DeFi in the past sort of 12, 18 months. And we were driven here by consumer demand, first because increasingly, most of our 40,000 users were saying, I hold crypto assets, but you don't show them to me, and I need to know how to actually use them in my real life. We were like, okay, great. And then they said, now we're interested in DeFi. And we were like, okay, let's start integrating that. But what's interesting when you talk to most mainstream consumers is a lot of the stuff that we all think about in this space, they don't care about at all. So they're very used to doing KYC. And I think, being able to give them that sovereign identity is going to be a game changer. But as of right now, they're not asking for it, right? So we as an industry are saying, we can provide this to you and it will make things better, but it's still going to take a while, if we're honest, before that becomes mass adoption to enable them, because they're actually very, very comfortable going through the steps that they're used to in the traditional finance world. And I think sometimes we forget that. And in our eagerness to kind of use all the technology that we have access to, we're almost trying to drag them along at a pace that they're not comfortable with. What they're most comfortable with is things which feel familiar and feel safe and feel like much of what they already do. So the closer that we can bring a lot of the kind of user experience and the steps to what they're used to from a kind of fintech experience, regardless of what we've got behind the scenes, the better for now. Because they sure as hell are not ready for Web 3. They're probably ready for about Web 2.0.5 at the moment. Same is true of the banks and the institutions. They're not ready for Web 3. They're ready for Web 1.8.4. So, I love that there is so much innovation, but I think we have to be very, very realistic about what mainstream consumers actually have an appetite and a readiness for. Because I can tell you that with our own startup, we're still trying to get people used to kind of digital mortgages and some of the things, some of the, and investing digitally. That's only really accelerated in the last kind of 18 months, right? Because of the pandemic. So the pace of change that we can do on the blockchain side is absolutely not reflected yet in what consumers are ready for.
Yeah, and I agree. I think we have seen that the pandemic has been bad for many reasons, but the reality is that many of the consumers, they're much more digital savvy these days, and they're much more used to it. I think with any innovation, with any technology, what typically happens is you just basically replicate what you know, and then you start innovating a bit more, and that's what we're seeing. The only caveat I would say, and I'll add, is that it's great to get more people coming into this space, and it's great that we make it really simple, but we also need to make sure that they understand the risks and educating the side of it, because it's still an industry that we're still really innovating, and we're still really understanding what are some of the risks, so making sure that we're educating, and I think that's the key thing around the trust. Not just making it available, but also making sure that you educate around the risks, that you have some of the issues I also thought about. So I think, John, you were talking around if you lose your key, what happens? And you have this concept of the community and how you can show the community that you are who you say you are. So start thinking about some of the risks, some of the issues that could happen, and start educating the consumers around what does it mean and how can we mitigate some of the risks, I think would be the other thing I would add.
I've seen some really nice startups in the space that allow you to enter into ownership or holding a wallet that has a very Web 2 interface. So you go in, it's easy to get in, and then once you've got the asset, which is in a custodial, so you don't actually own the asset yet, but they set up the wallet that way, then they begin to introduce you to the next stage of, actually you can transfer this into your wallet yet, but to get people to do that right at the offset of what they're doing, it is really difficult, especially without an understanding of why they're doing it in the first place. So it's great that we can have a whole bunch of people attracted because price and NFTs and headlines, and it gets people crypto curious. A lot of people come in to make a fast buck, and a lot of people stay, which I love. But I think you need to understand why you're going through this painful process. What is your reward at the end of it? What does it mean to you beyond just being crypto curious? So I wonder if you have any progressions that you've seen in Polygon where we're seeing more people coming into the use cases you have rather than the crypto natives sort of using those platforms.
So Polygon is a very different kind of a platform. We have heterogeneous audiences. We have audiences like who have been OG, like from day one, really crypto native people, like, you know, multiple wallets, cold wallets, hot wallets. So those kind of people like just zapping around the yield protocol. And also we are onboarding a kind of an audience, I think, which you are talking about, the fintech audience. But I agree, for onboarding the fintech audience, we need a certain kind of an application experience from startups, from new founders that makes their life so easy. For example, we onboarded Stripe, right? And it was a huge move. Like, it was not easy. Stripe is really famous for their application layer, and the process they designed it, they carefully had the product market fit, and it was a smooth process. The second kind of a user, I think, who will never know they are getting onboarded on their wallet sometime would be for example, Starbucks coffee drinkers. Their loyalty points are going to be minted on Polygon. So they might not realize their stuff is running on Polygon, but at the end of a 6 month, they would say, oh, I can gift and I can lend my Starbucks coffee gift card. Oh, what's this? So, it's a different kind of users. Some of the product, one of the biggest use cases which are coming around in the DeFi is kind of an on-ramp, off-ramp, end-to-end solution. Like, DeFi doesn't need to live in the silo, right? You just hook onto the bank account, complete the transaction, earn your yield, do swap, whatever you like, and then go back again to the real world. That's the seamless transaction use case we are looking after.
Yeah, and that's really kind of what we're tackling, that ability for you to, be able to compare, side by side, a traditional finance product and the equivalent in DeFi, right? So if you're trying to buy a new car, you can check out what car finance is available through a high street bank, or you can see what you could get with Aave, right? If you're holding crypto assets. I think that ability for people to understand it in the context of things that they're trying to do, transactions they're trying to make, is super, super important. And then I think I thought that your point was interesting about the Starbucks use case, because Starbucks is effectively the world's biggest bank. If you take their loyalty points and if you turn that into assets which then become tradable, so currency, which effectively is what's happening. So they've always shied away from doing this in the past, because from a regulatory perspective, the minute that you take loyalty points which are in a closed environment can only be used as currency within your own stores, and then open that up as a loyalty program where effectively those points, those tokens can be traded on an exchange or for other goods and services, you become a bank. And so you suddenly find yourself in a completely different world of regulation, away from just, selling coffee to suddenly becoming the world's biggest bank. So it's fascinating that they're going there.
Yeah, and now you can mint your NFT in Instagram, right? That's also on Polygon. So different kinds of users, you see different use case. Yeah.
I also think it's fascinating as we look forward, and this is something that Caroline and I have discussed a lot, is that if you look in the traditional financial sector, apologies Rita, that most of the financial products and the way that you live your life and manage your finances are built for baby boomers. So we don't have the same career paths, everything is changing much faster, people are more transient, they hold multiple jobs rather than one job. This golden handshake of a pension after the end of 25 years just doesn't exist anymore. And we're seeing creator economies and things like this, and this is where I really see that DeFi has so much value attached to it, because you don't have to work 40 years and then rest. There are so many different ways that you can manage your money and your finances that I think DeFi has a lot of opportunities to do. I would love to hear any of your thoughts on the future of the economy in that respect.
I hope that it's going to be an additive economy, by which I mean that I hope that we're not just going to impose exactly the same kind of business models in this new economy that we've got in the old one. So what I'm hoping for is, and again, unfortunately, regulation kind of rears its head on it, I'm hoping that what we have is a much more global, inclusive system, where it doesn't matter where in the world you happen to be born or located, it doesn't matter what your income is, it doesn't matter kind of what your background is in terms of credit history. If you hold certain assets, or if you want to do certain things, you're not excluded by systems which are very, very opaque. Right now, most of us, we apply for a mortgage or we apply for a loan and we hope for the best, right? We put in all of the application, we check our credit score, and then we have absolutely no idea what criteria the bank is going to score us against, right? So we don't know if we're eligible, we don't know if we're going to get it, we don't know what interest rate they're going to charge us. It's all completely up to them. And what I think DeFi offers, and this is where it's kind of exciting, is that all of that is transparent. You know going into it what you're eligible for, what you're going to get, and it doesn't matter what your credit score is. If you hold a certain amount of Bitcoin or ETH, you can get access to loans against that, right? There's nobody telling you whether or not you can have it. And I would love to I think that for me is what opens this up fully.
So it's a good point. I think in terms of the credit scoring, it's an interesting one, because if we think about a few years back, we didn't have as much information. One of the interesting opportunities or use cases that are coming up within DeFi and Web3 space is really that now we're going to have much more information. So if you think about the digital identity, and not just the digital identity as we have today, so not just bringing the Know Your Customer and QIB into Web3, but also thinking about if we have a digital identity where the interactions that we have with other people are actually part of your identity, if the fact that you are, a member of a specific club, it's also part of your identity. So we start having other information that could potentially be used for credit scoring, for loans, for mortgages.
And does that excite you or does that terrify you? Because on one hand, that terrifies me, right? Because then who's saying, again, it's always about gatekeepers, isn't it? It's like, who's using that information and what are they scoring you against to give you access or restricting you from having access? Because like in terms of, and I do understand in terms of kind of building credit risk profiles, and if you're doing underwriting, you need to have access to certain amounts of data. But if the data points suddenly get broader and it includes everything that you might ever have done socially, it starts to get like full surveillance.
Yeah, exactly. So there is the risks and the opportunities, right? Then who holds the data, who can have access to it? But the other interesting part is, for example, within DeFi, if you go into DeFi now, you have this concept of over-collateralization, because you don't know who is it. So right now, if you go into a bank, the bank needs to know who you are to know if you are able to pay your loan back. And that's why you don't have to pay more. In DeFi, because we have no identities, you have to over-collateralize. You need to provide more money than actually what you're taking, because if there is a problem you don't pay back, there needs to be enough liquidity in the pool, right? So all these types of, I think, use cases, they can be brought into the centralized world, and they can also be used into the DeFi world to improve even more the use cases. Because if we are realistic right now, if you're over-collateralizing, then again, we are not bringing the masses into DeFi, because you can only bring a certain profile of users. So I think all these use cases, it's so early that I'm not even sure that we know all the use cases, but definitely the identity, it's super interesting. It's also super scary. But you can think of it in all the angles, and bringing back what Amit was saying around the $0 proof, with that technology, you don't even have to share all your information. So right now, if you go into a supermarket, you need to provide your digital identity or your driving license. And in there, you have all the information. You have your name, you have your address, what day you were born. In the reality, they just want to know, if you're buying alcohol, are you above 18, right? So with $0 proof, then they will just be able to say, yes, this person is above 18. You don't even have to share what year you were born in. So I think the main part of DeFi and this technology that really fascinates me is you're bringing so much more different ways of looking at information. You're bringing so much more data that it can be used to improve existing processes and also new ones.
Yeah, that's interesting. And John, I was just thinking, as Rita was saying all of this, do you think that from kind of a technology and security level, do you think DeFi is ready for the masses?
Oh, good God, no. Absolutely, 100% no. I mean, I was listening to one of the talks earlier on today, and 50% of the yields generated in DeFi last year were lost in exploits. Like, I think it was 24 billion yield generated, 12 billion taken out of the system in exploits. That is far, far, far too high. 1% of crypto or DeFi is insured at the moment. Like, those figures are just terrifying. We're nowhere near ready for the masses when it's still like that. We're still in the Wild West. We're still right in the infancy of DeFi. We don't know what it's going to become. And let's be honest, in crypto, we're very much in our own echo chamber most of the time, talking to other people with the same ideals or similar ideals in the same space. I'm not sure we even know yet what the mass market will want from DeFi. Will they want self-custody? Will they want to be able to bring their own real-world identity, as Rita said, into the digital economy so that they can borrow without having to over-collateralize, so that they can make use of real-world assets and bring them on-chain and use them as collateral for other things? Like, I think we're only scratching the surface so far on the use cases, and we're definitely only scratching the surface in terms of security, stability, and the trustworthiness of the DeFi protocols.
Do you think that the biggest...
Caroline?
Sorry, I'm curious, do you think the biggest thing that could happen to build that trust would be if there was the equivalent of like the financial compensation scheme? You know, like with banks, you get a certain amount, is it 85 grand? You might know this better than me.
The protection that you have.
Yeah,
the bank guarantee scheme of, like, I think it's 100K per account. But that works because the government back it. The government back it because there is a very tight, long-established relationship between governments and banks. Right now, governments are very skeptical or downright distrustful of crypto and DeFi. So I think we're a long, long way away from being in a place where banks will be willing to extend that same guarantee. And I can't see us getting there without a lot more regulation, assuming it's the right kind of regulation.
So we have 60 seconds left. Thank you so much for sharing your insights. What's the one thing that you would like to see? What should we work on first? I mean, it's always multi-level, but what's the one thing you'd like to see change that you think that we should be focusing on, each of you, to share what that might be? And of course, it could be the same things.
I mean, if I need to choose one, it's probably user experience.
Yeah, mine would be the same, user experience and education piece.
Yeah, I have to agree. User experience and education are really lacking at the moment.
I agree in the user experience, but I would like to add, for any mass adoption, we should have a template of Web 2, Internet 2 to Web 3. So Internet has to become cheap to become adopted in past 20 years. So similarly, blockchain needs to get to a near zero level to get adopted. Like you don't have to pay any gas fees or sort of things. So I think that will help the next mass adoption phase.
Thank you very much. There's a lot to be done, but I'm very excited about the future, and thank you for sharing your thoughts.